Hey, what's up guys? It's Andrew here from Pennant Players, and we're back with another video. This time we're going to be talking about pennants, which can be an extremely strong signal, and a formation that you can utilize in your trading. So without further ado, let's get into the video, and be sure to like, share, and subscribe for more. Okay, so a pennant formation is going to be a very strong signal, and something you can utilize in your trading. Now, with the pennant formation, you're essentially looking for breakouts. So unlike something like swing trading, where you're looking for highs and lows, in order to get the best deal, with a pennant you're looking for the consolidation after a sharp move up, a coiling of the price action, if you will, in order to get in on the next breakout. So let's take a quick look at how a pennant works, what it looks like, so you guys can better use it in your trading. Now, the basics of a pennant. We can see here this is a pennant that I was able to get in on a few days ago, and this is essentially a textbook perfect example of a pennant. Now, this was IDEX, and we can see here that it was trading at about 35 cents. Now, throughout here, it had a sharp move up into the $1.34 range before coiling in this little triangle right here. So it coils into this triangle, and then at the end of this triangle, here is the breakout point right here. Once it crossed above this resistance line, we saw another sharp move up. And so you might be asking to yourself, well, what's the difference between a pennant and a symmetrical triangle? Well, there's a few differences, and I'm going to go over them right now. So as you can see here, a pennant, if we just zoom out a little bit, it's very filled in. And what I mean by that is the triangle that's formed after this sharp breakout is very dense. We can see a lot of lines up and down, and it tends to be more obtuse of a triangle. It's not as elongated, and it's not as drawn out as a symmetrical triangle might be. So that's one. The second way to tell the difference between a pennant and a symmetrical triangle is by the first move up, when it's going into the pennant. So as you can see here, this is an extremely sharp move up, very vertical move. With something like a triangle, a symmetrical triangle would have much more of a steady climb up instead of a rocket ship up. So it'd have a much steady climb up, with many more pullbacks throughout the way, many more hitches within the price action. Comes down a little bit and goes back up. As you can see here with this pennant, it's very sharp rise up before it forms the actual pennant. So that's a basic overview of what it looks like. Now, how to use them. Well, we can see here that we have this pennant forming, and with a pennant, you're going to want to use a lot of the other technical indicators as well. Something that's very important with pennants that I found is volume. Now, we can see here the volume. You're going to want to look for a sharp move in volume upward along with the sharp move upward in price prior to the pennant formation. So what I mean by that is right here, you can see this red line, this red trend line. This sharp move up had a lot of volume. And what that is it's signaling a very strong move. So it has a fundamental backing of a lot of people trading it, a lot of shares being traded. So that signals a very strong move before a decrease in the volume, with still forming this pennant. So a lot of times you might see with a decrease in volume, a decrease in price action. Whereas here, it's not necessarily decreasing in price action, because both the support is going up and the resistance is going down, forming this little coil right here. So it's kind of condensing the price action. It's not sharply going down, even with a decrease in volume. Now, we can also see here with the MACD, if we zoom in a little bit, let's go to a 90-day, 2-hour. So we can see here with the MACD, we also had a very good indication that this would rise in the future, because as you can see here with the MACD, it sharply moves up, and then as it coils, it comes back down. And you can see it hit a peak here with this histogram, and then steadily rose up, moving into this green territory right here. Also, while this blue and yellow line kind of converges. So we can see here that this is, a textbook definition, textbook example of a pennant. And so from here, you're able to depict that if it crosses this line, this top red trend line, this is going to be a breakout. So I was able to get in here at around this 122, right when it crossed that red trend line, and from there, boom, sharp move up, almost 70% gain, which was the potential. Now again, there's no such thing as a perfect trade. So a conservative approach would have been to take this out about halfway from the symmetry here. Again, this is the line of symmetry, so we can draw this right here. And then this is how much this first move up was, and then duplicate, and then drag this over to from the breakout point right there. So you can see the potential for this trade was in 210s range, and that's where it settled. However, it doesn't always settle that way. So more conservative approach would have been to take it out halfway, which is about what I did, about this 175 range, which is still a phenomenal profit, over 40%, which is massive for a trade, especially a day trade like this one. Now, while this pennant is a bull pennant, there is also another form of pennant, which is a bear pennant. And a bear pennant is essentially the opposite. So if this was going from the top down, this would be considered a bear pennant, which would be, you would anticipate a bearish breakout. So a breakout below the support line instead of above the resistance line. So let's say this had gone, it was trading up here, and then it had a sharp move. So let's say this is the line right here of the price action, kind of like it was here. So think about this is this, and now it had a sharp move down, and then form this same kind of like pennant. This would be something like this, just the inverse of this would be considered a bear pennant. And with this one, again, it's a bearish signal, so you're going to want to look for a potential breakout to the downside below that support. And it would be the exact same thing except just inversed. So you can take a look here, draw this, boom, duplicate drawing, and now go over here, and that's the potential downside. So essentially it's just the inverse of this. If it's coming from the upside, it's a bullish pennant. It's coming from the downside and then forms this same pattern. Just the inverse, it is a bear pennant. So with a bear pennant, you're expecting a break downward. And with a bull pennant, you're expecting a break upward. So that's it for the video, guys. Thank you for watching. I hope you found this video very helpful. Be sure to like, subscribe, and share for more. Stay green.